In the meantime, another sector that has been under a little bit of pressure is cement. Mangesh Bhadang, the Senior Vice President Research at Centrum Broking, joins us now to talk about the cement sector and to discuss pricing trends as well. Prices, in fact, declined for the fourth consecutive month in February, and we've been hearing ad nauseum from the sector about a weakening of demand. Mangesh, hi, thanks for joining in. Just tell us first, how is the demand situation? Because now we're getting into election season. What generally happens around this time? And do you see further weakening of demand in the quarters to come?
Hi, good morning, everyone. So demand definitely has been weakening for the past few months. In fact, first half of this year, FY24 for cement has been very good with almost 16% growth. And second half, we started third quarter with only 5.6% growth, and we believe that 4Q would probably average at around only 3 to 4% growth. So this is just because of the elections. I think, the government's infra spending has slowed down, and that has resulted in some weakening in the overall demand side. In terms of expectations, we believe that even the first half of FY25 could also be weak because we'll have elections in the first quarter and monsoon in the second.
Okay. In the note, you also go on to say that companies have not been able to meet their internal volume targets because of the softness of in demand, despite offering discounts. So how is this impacting, what the companies were earlier expecting the first half to be and what they will end up with? What's the extent of a volume decline?
So volume is still in positive territory in terms of growth. So post the state elections, which happened somewhere around October, November, there was widespread expectation that January to March demand should be good because pre-election spending should be there from the government side. But that has not happened. And generally, March is the month wherein we see a lot of volume push from the companies. But given the demand weakness and weak pricing, we have seen that even that push may not come through in this month. In terms of percentage, it's not down on a YY basis, but compared to expectation, it is low.
Mahesh, in terms of what you like in the space, right? It's a very scattered sector, and specific dynamics in some parts may be different than others, and that obviously have an influence on picks. So what's looking attractive to you right now?
In terms of regions, we believe that South and East are the worst affected when it comes to both demand as well as pricing. So despite the correction in the stock, I think there would still be some more time correction in the stocks like Dalmia and Ramco, who have a very high exposure to these regions. On the positive side, we like UltraTech as well as BirlaCorp, wherein we feel that UltraTech for its size and BirlaCorp for certain incentives that they are going to accrue this quarter. The numbers will not be as bad as for the rest. So we'll probably go with these two names now.
UltraTech and BirlaCorp, you said, right?
BirlaCorp.
Okay. You also spoke about how, because pricing has been weak, you've not seen any major volume growth in the month of March. Is that the expectation as well, that going forward, volume growth will continue to be either in low single digit or barely any volume growth, at least for the next couple of quarters? What is your own volume growth estimate?
Yeah, so see, this is the third year wherein volumes for cement has been very good. So if you take out the average, 9 to 10% growth has been there over the past 3 years. I think FY25 first half is going to be soft because, as I said, because of elections and monsoon. And generally at the post-elections, it takes time for the government machinery to come back in full force and start delivering on all the capex and spending. So 25 could be softer with only 4 to 5% growth is what we are building in right now.
Is this common, Mahesh, that during the election, in the run-up to the election, that demand is a bit subdued? I thought typically we would have this pre-election rural infrastructure spending.
No, so if you look at the data for demand growth against elections, there is no direct correlation. So we have seen in the past that there have been years wherein demand has been very good. So the way we look at it is, historically, whenever running into the election, whenever the demand has been good, we have seen some slowdown. And in the past, whenever we have seen that, the demand was extremely low before the election, then generally it tends to pick up post it. So as I said, we have had a very good 3 years of demand till now, and that's why at least first half we are expecting that some softness will be there in demand. And this is actually evident from the channel checks that we have done. And most of the dealers are suggesting that even on the rural as well as IHB side, the demand is soft. And there are certain states like Bihar, Jharkhand, West Bengal, then Kerala as well as Telangana, wherein they have mentioned that the demand has actually contracted on YOY basis.
All right, we'll leave it at that. Thanks a lot for joining in and helping us with the cement situation. So demand is under pressure. However, there are some upgrades that have also come in on the cement space. City has upgraded some of the cement stocks as well. Shree Cement, yes. And as Mangesh was telling us, he likes UltraTech Cement and BirlaCorp.